Well, trading lesson of the day, and it's a simple one. Nothing in life is free. Actually, that's technically not true, because you know what is free? Unconditional love from your family. That's absolutely free. But that's about the only deal you're gonna get. Everything else is gonna cost you. You wanna buy a new car, fork over that cash. You wanna make a trade, cost of doing business is accepting a loss. So what I wanna talk about is a mental tip that is gonna help you to organize and be confident and also be disciplined in your trading by understanding the cost of doing business. Now, one of my favorite analogies for this that I don't think I've said enough to some traders when I talk to them about risk management is try to picture, like, whatever your favorite sport is. If you like basketball, nobody cares if you got a triple-double, 30 points, 10 rebounds, 10 assists, if you got 20 turnovers. It doesn't matter. If you want to hit an 80-yard bomb in football every now and then, that's great. But if you're throwing picks left, right, and center, like Dak Prescott, then you're going to have a problem. The cost of every single throw is the risk that it might be incomplete or that you turn it over. It doesn't matter how many points you score if you're turning the ball over every other time you touch the ball. So you've got to understand what the cost of doing business is with your trades. And if you've already accepted that cost, then suddenly the loss doesn't matter. Think about a great player like a Michael Jordan or a LeBron James or a Kobe Bryant when they take that final shot. They already know that cost. You're down by 1, you need 2 points with seconds left. If they miss, team loses the game. That's a really simple example of that. Take the shot, you win. You have to take the shot to win, or you're not going to win at all. It has to be taken, or you're going to lose. In that case, you're going to lose anyway. So when you put it in that perspective, suddenly, go for it. Why not? No problem. Trading is kind of the same way. So before you get into a trade, the way I like to think about it is you're taking X number of shares at X price, and if you're wrong, you're getting out at Y. That theoretical loss is your cost of doing business. So before you punch into a trade, accept that loss right away. So if you're taking, I'll give an example because it was the first hit I took today, was a breakout on AMD at 200 bucks. So if I'm taking a breakout with the previous pre-market high, and we'll come to the chart for this one, guys, if I'm taking a breakout to the previous pre-market high and giving it a shot to go, I know that I'm going long when that bad boy breaks 200 bucks. I know that if it doesn't work right away, I'm stopping out back at that pre-market high. Now, if it's, let's say it's an 80-cent level, then I'm going to respect that and know that if you, look, regardless of how many shares you take, you're going to have an 80-cent hit plus a little bit of slippage. So let's call it 90 cents. That per share, as soon as I punch into the trade, it's gone. In my mind, I am down that amount of money. It's like when you put a Hail Mary up. You're accepting the fact that, hey, that could get picked off, but at the end of the game, it's worth it for that shot. So if you tell yourself, I'm now down that 80 cents, a couple of things happen. You accept that that is the worst that can happen to you, and it's easier to then get into the trade because you've accepted that loss before you've even gotten into it. So mentally, that can help you to get into trades in the first place. The second part of it is if you've already determined what that loss and what that wrong is going to be, you can start putting some upsized targets. And I'll give you an example by the second time I was into this trade on the breakout, because when it didn't work the first, I was in it again when it retook the 200, this time with a much tighter stop. Much, much tighter stop. I was only giving it to about 75. So in that case, I had mentally prepared myself for about 30 to 40 cents worth of a hit. And with that, my approach was much different. Taking 80-cent profit, taking a 90-cent profit, taking a $1.20 profit, because I had mentally prepared myself for a 40-cent hit plus slippage. So you're geared into the trade that you're trying to make. And remember, when I was taking that first trade, you're risking 70 to 80 pennies. You know that could be it, closer to $1. That's got to go right away to 01s, 02s, because I've accepted that kind of a hit and I'm expecting it to be a bigger trade. So it doesn't just set you up to prepare for what can be the worst, it also puts you in the right frame of mind to take the relative gain on your trade. This becomes equally important, or maybe doubly important, when you start trading a stock a little bit away from your plan. Because I can tell you, a lot of times you can favor a direction on a stock and a certain entry price, and you have an entire risk plan set up for it, and then something a little bit different happens. And that happened over on FSR, and you've got to go through the same math, because I sat down wanting to short it into 50, thinking it could squeeze into that price, and then you'd short it at the 50 level, and then that would come back in, and I was expecting it to be that. But what happened at the open? It popped up, it rejected off 45, nowhere near that 50 level, and then came in and broke the previous low. So that set up a failed break at this high for an entry here. But while that happened, am I mentally preparing myself for 43.5 to 50, my original price? No. Before I get into that trade, I adjust my stop to here. That is 2.5 cents worth of risk. So instead of 9 cents to my previous level, no, it's 2.5 cents worth of risk when you get in. And then you ask yourself, can I accept it? Okay, fine. That is the amount that you are down at that moment. And then suddenly you can take that with a little bit more confidence. But before you punch in, know where you're out, know what that is going to cost you, so that you can have a good expectation of your downside risk. Good athletes do this all the time. You're not going to see Tom Brady scan the field and make a throw, well, back when he used to play, and make a throw without assessing, well, what's the worst scenario if I throw a one-on-one ball down the sideline? What are the chances it gets picked? Is it worth taking this shot based on where we are in the game? And you've got to be able to process that as a trader as well. So it's a very important thing to do, because ultimately, nobody cares how great the thing is that you bought. You go into a swap shop and buy what you think is like, hey, that's the coolest, I don't know, like maybe you're talking about like some cool card, because I'm a card collector. Hey, I got a Wayne Gretzky rookie card, and say it's worth a few $1,000s. Doesn't matter if you pay twice what it's worth. It doesn't matter how good the thing you buy is. You get a Maserati. But if you pay twice as much as it's worth, who gives a damn? You've paid too much for it. Your cost of doing business is that risk amount and what you are willing to lose. So if you can't make that, then don't take that trade. And that's an important thing for trading. You should know going into the trade how much that trade is costing you. And if you don't know how much it costs you, why are you buying the upside of the trade? You do not buy anything you don't know the cost of. So you've got to determine that cost, and then you've got to make sure that trade is worth it. Because if you're sitting there losing 2x what you win, your account is going to get it blown up real quick. The cost of doing business when you trade is the amount you take relative to the loss you're willing to accept. If you can't wrap your head around that, you shouldn't be trading in the first place. And then when you can, all of a sudden you're going to be free and clear to take the trades that's set up for you and make sure you get the appropriate gain after you've gotten into them. That's the lesson of the day and the real deal. All about that mental prep.
Thank you, Neil. Informative.